Hey, this is Scott Cole from besttipsfortrading.com and bestdaytradingstocks.com, and I just wanted to provide a little market commentary from this past week and particularly Friday. So I've got a chart of the S&P 500 index up here, and at the far right of the chart obviously is where our most recent trading activity has occurred. And on Friday we had a nice up day in the market over here, and the market was generally up well over 1% across the board, and I believe the Russell 2000 was actually up well over 2%. So we had a nice up move on the day, and if you notice also, there was a pretty sharp reversal during the day. As you can see, we closed closer to the highs, and we actually opened relatively flat and then traded downward quite a bit, and then we rallied into the close, and so that could be construed as a positive sign for the market. The main issue that I have is that the volume in the S&P 500 was actually lower on Friday than it was on Thursday, which was this down move that occurred on Thursday. So as we look at this entire trading pattern, I've mentioned this before, we've got basically a triangle going on here, marked by this low here on August the 9th, this peak here on August 17th, this low area here about the 19th and the 22nd I should say, and we have this other peak here on the 25th, this past Thursday. So basically, we don't want to see the market break through the triangle to the downside. Triangles tend to be pretty good continuation patterns. Now, I will say that when the pattern isn't very tight, if it occurs with tremendous volatility, the breakout of that pattern to the downside would suggest that the move downward after that is not going to last very long. Tends to result in a false breakout, actually. In the case if it goes to the upside, I wouldn't expect much to the upside either, because I'd really like to see this market settle down quite a bit before it's going to make a meaningful move in either direction, but particularly to the upside. So what I don't like is the lack of volume on Friday, and with that reversal to the upside. It was a positive day, so we're going to take that at face value. We should be testing these highs that we made on Thursday. Let's check out the Dow. That high would be at about 11,406. So we'd like to clear that in order to have an opportunity to test the 11,530 level, which would be the high on the 17th. And if we can break through those meaningfully, then we should be able to start moving to the upside. But we are going to obviously run into some significant resistance below that 12,000 level, somewhere around 11,800, and on all the way up to the highs that we saw in July. So at the moment, I would say the market is probably going to be in a trading range. We can get above those recent highs, of a couple weeks ago, then there should be some upside move, but there is the danger that this market can head lower too. So my call right now is we're looking kind of neutral until we can break out of this current trading range. And so I would be cautious with all my bets, especially on the day trading side of things. Be very careful. The last couple days we've had some sharp reversals intraday. I wouldn't be surprised to see that continue. I think all eyes are going to be on economic data going forward. I'm not sure, but I think we might be getting an employment report out this coming Friday. It's the first Friday of the month, so that's usually the case. And so that definitely could be a market mover. So be careful. The volatility is still high, so don't be overly aggressive in these markets at this point.